Hey everyone, you ever look at a price tag and just kind of wonder, what am I really paying for? Well, today we're going to do just that. We're going to build a bill right from the very beginning, piece by piece, and uncover the cost, the profit, and yes, the taxes that make up that final number.
I mean, it seems simple enough, right? You see a price, you buy something, but behind that little number, there's a whole story. How much of it is the actual cost of the item? How much is the seller making? And of course, how much of it goes to taxes? Let's uncover that math right now.
Okay, to make this super clear, let's use a real-world example. Imagine a dealer buys an item for 7,500 rupees. Now, they're in business to make money, so they're going to add a 10% profit margin. And on top of all that, there's a 12% goods and services tax, GST. Believe it or not, these three little pieces of info are all we need to build the entire bill.
All right, first things first, before we even think about taxes, we have to figure out what the dealer is actually going to sell the item for. This is step one, the journey from the dealer's cost to that price tag you see on the shelf.
And you know what? It's a pretty simple two-step deal. First, we have to turn that 10% profit into an actual rupee amount. Then, we just add that profit right onto the original cost. Easy enough, right? Let's look at the numbers.
So let's crunch the numbers on that profit. 10% of the dealer's 7,500 rupee cost, well, that works out to be exactly 750 rupees. So that's the slice of the pie the seller is adding for themselves. Okay, so now we just take that 750 rupee profit and add it right on top of the original 7,500 rupee cost. And boom, that gives us our initial selling price. This is the key number before any taxes get involved. And there we have it, 8,250 rupees. This is our selling price before tax. Now, you're going to want to lock this number in your head because it is the foundation for literally everything else we are about to do. All right, we've got our base price sorted. Now for the fun part, taxes. This is where the goods and services tax, or GST, makes its grand entrance. So what is GST, anyway? Well, in the simplest terms, it's a tax that gets applied whenever you buy goods or services. The whole idea was to take a whole mess of older, more complicated taxes and just replace them with one single streamlined system. Now, this brings up a really important detail. Because this particular sale is happening within a single state, what they call an intrastate sale, that 12% GST doesn't just go into one big pot. Nope, it actually gets split up. And it's split right down the middle into two parts. You've got CGST, that's the central government's piece, and you've got SGST, which is the state government's piece. This way, both levels of government get their share of the revenue from the sale. And for these sales that happen within a state, the rule is super simple. The total GST rate is always split 50-50. So in our case, that 12% tax gets sliced right in half, 6% for the central government and 6% for the state government. Okay, so that's the theory. Now let's get back to the calculator and figure out the exact rupee amount for each of these tax components. Now listen up, because this is probably the most important part of the whole process. The tax is not calculated on the original cost price of 7,500. No way. It's calculated on the selling price we figured out earlier, that 8,250 rupees. So what we need to do now is find 6% of 8,250. So you run the numbers, and what do you get? 495 rupees. That's our CGST, the slice that's headed to the central government. And since the rate for the state is also 6%, the math is exactly the same. The SGST, the state's share, is also 495 rupees. Perfect. We've figured out both halves of our tax bill. We're on the home stretch now. Okay, let's take stock. We have the selling price, we have the central tax, we have the state tax, we have all the pieces of the puzzle. Now, all we gotta do is put them all together to see the grand total, what the customer actually pays at the counter. And it's just some simple addition from here on out. We start with our selling price, 8,250. Then we add the 495 for the central tax. And finally, we add that other 495 for the state tax. And there you have it, 9,240 rupees. That's the grand total, the final amount that the customer pays. We have successfully built this bill right from the ground up. You know, this table really pulls it all together perfectly. It looks just like what you'd see on an actual receipt, right? You got the base selling price, you can see the two separate taxes broken out, and then that final total at the bottom. It's all accounted for, crystal clear. So let's just do a quick recap. Remember, you start with the cost, You add the profit, and that gives you the selling price. And this is the big one. GST is always calculated on that selling price, not the original cost. And when a sale happens inside one state, that GST gets split right down the middle between CGST and SGST. The final price you pay is simply the selling price plus all those taxes.
So I'll leave you with this little thought. The next time you get a receipt, take an extra second to look at it. Don't just glance at the final number. Now that you know how it's built, will you see the math hiding in plain sight? Something to think about. Thanks for joining me.